Sure. I think the first place I start is just with a database of other companies that I've researched and done work on in the space. So have information, generally models and notes on 200 companies in the microcap space, and generally look to invest in around 15 at any given time. And so just because our philosophy is just because you do work on a name doesn't mean you have to make a decision or an investment decision that day, that week, that year, but to continue to monitor those companies over time. And when the analysis is complete, come up with both a fair value of what we think the company is worth and also a potential entry point on when it would be right to buy and the right price to essentially own the business. So have a long list of companies that continually look at the price and see if, from a risk-reward standpoint, if things have changed, or also monitor to see if the business conditions or the environment's changed for the company. So that's kind of the starting point, is a big background of companies we've already done work on. And there are a few other avenues we go about to find potential ideas. The first is do 3 or 4 screens on a weekly basis just at the end of the week to come up with potential new names. And those are based on 3 primary criteria. The first is a general enterprise value, or enterprise value to EBITDA, or cash flow to EBITDA, to try to find companies that from a payback standpoint of free cash flow, it's a relatively quick payback period, and try to keep that up to date. And generally, when companies sell off or when there might be a problem, maybe those screens suggest at least a name to take a closer look at. Another screen we like to look at is essentially a net PP&E to enterprise value screen, and this is looking for companies with real assets where the company might not be where investors might not be placing full value on the actual assets of the business. And this reduces the risk of, say, a company's in an earnings trough, or something's going wrong with the business over the last year that temporarily made free cash flow or profitability less than it normally would be. So this attempts to find companies with real assets on the balance sheet that might not be fully valued by the market. And the final is a 52-week low screen. Look for companies trading within 10% of their 52-week low, and find that's a helpful way to find ones that might not be attractive on a metric standpoint, but for one reason or another are disregarded by the market. And it's a good place to dig in more. So that's certainly nothing necessarily comes out of that, but there are idea generations and a list of names to look into more. And the next, kind of taking the next step in that process, whenever we look at or analyze a company, try also to dig into their peers, their comps, their competitors, their customers, and in that regard, a lot of other names come up that might be a good idea to take a look at. And so try to stay very intellectually curious, and just because one name or the first one doesn't pan out, there are a lot of other things, just if you kind of look or take one other step where new names might become interesting.